What are kind of the blueprint of your strategy, and what would you say are the main ways you look at the market?
Yeah, so I think probably best to explain how it started. So I started very much on like support and resistance and patterns, like most people probably got into trading. Nothing wrong with that. I mean, we all know that it's not, there's might not be an edge there, but it's a good way, I guess, to kind of get some knowledge in the markets. So that's how I
I like how
started.
politically correct you say it's like might not be an edge, but if you can explore what you're trying to say, like
Yes.
with support and resistance, head and shoulders, uh, what are your thoughts on that?
So support, resistance, supply, demand, same thing in my opinion. And if I see a supply zone, I am actually trading through that. And the smart money traders, they're not going to like this. They're not going to like this at all. But I am not, like anytime we get a reaction from a supply, I am trading into the supply and to actually take that supply zone out and that high out. Does that make
Okay, to
sense?
clarify, in a supply zone, ordinarily people would sell.
Yes.
You're buying in supply
Yes,
and
I
selling
am.
in demand,
Yes. Yes.
with the logic being,
The logic is I know that everyone's going for a certain direction there, whether it be a supply zone, and for me, that's a resistance level, right? So there's a resistance level, supply zone. You might have, equal highs or a resistance above that. But traders aren't seeing that. They're seeing a bearish break of structure. And if I see a bearish break of structure, I'm looking for ways to actually go long into the supply and actually to take that supply out. So I'm waiting for a reaction where I know a lot of traders are going to go short, and there's going to be a lot of them that's going to go short around a supply, close to a supply, whatever it might be. So I'm looking for a reaction, maybe some bearish breaks, anything. I have other confirmations too, like a bearish break, and it takes out a small support level, maybe on the 1 minute, something
okay,
like that, and then that's a buy for me. And then for gold, it's a 20 pip stop. For Euro and GBP USD, it is a 10 to 12 pip stop
sweet.
always.
So I've been doing the podcast now for a year and a half, and I always kind of try to understand people's strategies. And if I'm to put it into kind of categories, I've understood that there's the people that trade the trend, and they're very, whether that's fundamentals or technicals, trend can be established through long-term macroeconomics, but usually supported by a daily or 4 hour, 1 hour market structure.
Yeah.
And that's kind of very typical. But as you said, anybody can read a supply zone, and usually in the supply zones, well, there's a ton of stop losses above.
Yes.
But there's ways people do it completely profitably. So that's kind of the pro trend traders. Then I've also met a lot of counter trend traders. So they'll allow the trend to play. They'll wait for the new lower low, and they'll trade that retracement. For example, Patrick Nill, I just interviewed the other day. He's 9-time champion of the world's Robin Cup World
Yep.
Cup. So he's proven as good as can be. He's a preferred counter trend trader, which I found interesting.
Awesome. Yeah.
Then you have other people that are waiting for the consolidation in the middle of a trend and then breakout trading. And then it seems like yourself, once that breakout has happened, once that trend, the retracement has happened, you're buying that last portion into that supply zone.
Yep.
And then probably someone like myself is like, after that buy out of supply,
Yep.
then it's like, okay, then it's the sell after the supply zone is taken
Yes.
out, which is what I call an inducement.
Yes.
So we can kind of label traders at each portion, where you have the trend, then you have the retracement, then you have the inducement, and then you have the
Yes.
new trend.
Yes, that's
Your
right.
your focus is on that inducement portion, I want to
That's
call
it.
it.
I'm trading the inducement, exactly
Okay.
that.
So just I wanted to go through that just to establish where you're at. And
Yeah.
why have you chosen to trade that kind of inducement out as opposed to the new trend or the retracement up? Why that portion at the top?
Just through trial and error, I found that more or less price is going to look to take out liquidity, which could be at a high. So if it's like, for example, like come back to a supply zone after a bearish break of structure, there's a lot of liquidity sitting there because it's not just a supply. Because like I said, I see that as a resistance level. Support and resistance to me it's an easy target because it's such a big pool of liquidity sitting there. So if I understand that, and I'm understanding that price is going to go there majority of the time, it's just up to me to get into a safe entry. That's why I leave a 20 pip stop on gold, for example, because I'm not trying to catch these high risk to reward trades. I used to do that, now I don't. I just want to catch a safe move into that supply and into that liquidity. Once that's taken, I don't care what price does after that. Sometimes it will continue, sometimes it will reverse. But I've already done my part by anticipating that the inducement is going to happen, and that's my trade.
Interesting. And have you found, because a lot of the time supply zones do respect, and you don't always get that kind of inducement. Specifically, I want to say when you have like a higher time frame zone, those M15, M5 zones, they'll get induced all the time.
Yes.
But that daily one doesn't always get induced. Sometimes it's just completely respected. It might
Sometimes.
do some inducements within, like it goes higher and higher and people are just early selling.
Yeah.
But how often have you found zones do get induced, and therefore building a strategy around that in terms of a hit rate?
So my win rate trading against supply zones, against demands, which is support and resistance, is around 60%. And I only go, yes, and I only go for 1 to 2 R.
Okay.
And actually that's 2.5 R is like a high end for me. It could be even 1 to 1.5, where I'll just close the whole trade, depending on, you know, if it's already taken out, you know, a high, done an inducement, and I just want that little bit more just to get that RR. Sometimes I'll just close it. So I've found that it works extremely well, because I can probably look at the chart and tell you that 10 different strategies are going short in this area. That's why I'm going long. I'm simply doing the opposite.